Central Bank Governor Tumusiime Mtebile's statement at last year's bankers' dinner painted a picture of a truly turbulent year for the banking sector, blaming non-performing loans in part for the sector's woes.
This has been a very difficult year. I think the key challenge has been the rise in non-performing loans, which have increased from 3.8% of total loans of commercial banks in September 2015 to 7.7% in September 2016. That's more than double.
The highlight of the year, however, was when policymakers began cutting the benchmark rate in April, bringing it back down from the peak of 17% where it had reached as the bank sought to manage growing inflation. Lending rates in commercial banks increased from about 21% in January 2015 to 25% in February 2016, and that was due to effects of monetary policy. This shift greatly impacted the banking sector as private sector credit gradually slowed down.
What we saw happening in the 9 months to in the 1 year, what we've seen in the past 1 year was one, a rise in inflation. We had a rise in inflation starting in the fourth quarter of 2015, and because of that rise in inflation and the risks to inflation expectations, we raised interest rates.
Subsequently, the central bank brought down its lending rate from 17 to 15 in June and to 14 in August and 13 in October, and now 12%. Adam Mugume, the Executive Director, Research, Bank of Uganda, says this is aimed at bringing down interest rates going forward.
We also believe that given that monetary policy has been easing, we believe that the cost of funds should really continue declining. We are talking about lending interest rate of 22.8. We believe that with further easing, we are likely to see further reduction in lending interest rate, which again will support private sector investment and other activities.
It is the high interest rates again that informed government's decision to look into the large fiscal deficit that gives banks the option of investing in risk-free government securities.
The financial products in the financial sector are not suitable for the long-term investments that take a long time. So there's a kind of a mismatch trying to support long-term investments using short-term bank deposits. So the action there is actually to reduce domestic borrowing. A decision was made in this financial year to reduce domestic borrowing. Further reduction is going to be made next financial year.
The sector's poor performance was made worse by the impact of Crane Bank's dismal performance in 2015. Banking sector after-tax profit was brought down about 10% to 486 billion shillings. Sector non-performing loans were also about 300 billion shillings. Standard Chartered Bank after-tax profit dropped 86 billion shillings to close the year at 28 billion shillings. Crane Bank posted a loss of 3.3 billion shillings from a net profit of 57 billion shillings. This coupled with a rise in expenses to cover for bad debts and non-performing loans that surged 142 billion shillings, the two banks had been the largest contributor to the performance of the banking sector. Generally, experts assert that the performance of banking sector in 2015 is a sign of real concerns going forward. And this year, moving on, banks will be occupied with reducing high operational expenses and boosting private sector credit. Malcolm Sime, NTV Tonight.